Hello everyone, welcome to ElliottWave-Forecast.com YouTube channel. This is Henry. Today is Wednesday, December 16. The time is around 4 a.m. GMT, and we are looking at the chart of the pound sterling cable. This is a 45 minutes chart here. We can see we ended with 4 in the intermediate degree at 1.3130, and then since then we have started to rally to the upside. And so we are now within this with 5 in blue, or in the intermediate degree right here. All right, and it looks like the rally looks to be a 5 waves, ending one in the black degree here. Okay, and then we have this with 2 pullback finishing here, and then also starting to rally higher again within the wave 3. So now, as long as we stay above 130, we should continue to see further upside. Now let's take a look at a couple of things here. Now first of all, you see in the blue box here, this is the extreme area, and which is always going to be where we recommend members to trade whenever they see blue box. So whenever there is no blue box, technically it is not really the best place to be trading or to be executing any sort of trades, despite what the chart is showing, right? So blue box is what we define as an extreme area. So if you take a look at the 4-hour chart here, now notice we have ended with 4 here. So I'm putting in a little bit more data. So this is the wave 4 and the same wave 4. So that means this is our wave 3. And so that means we are looking at 5 waves up. Starting from September 23rd low, we got 1, 2, 3, 4 here. Now you notice here we got a clear-cut 3S pullback from here. 1, 2, 3. And if the right side is higher, any kind of pullback is going to be always going to be corrective most of the time, right? Because otherwise, if it is an impulse, then you need to question whether the right side is correct. But if you can see right here, this is clear-cut 3S pullback here, 1, 2, 3, and if it is a corrective structure, it should be ending between 100% and 161.8%, and this is where you see in the blue box over here. So we actually took the trade in the live trading room here last time. All right, and our position now is already risk-free, meaning that we can already take partial profit on the way up here, and also move our stop loss to basically to our entry level. So in case it doesn't go up and it starts to go down again, we're gonna be out of the trade but without any loss, and that's what we mean by risk-free trade. Okay, now so that means if the execution is right, and if we enter at the blue box, then that position should be risk-free. Now let's take a look at the larger degree time frame. If we look at the daily here, right? If we look at the daily, if we look at it from March, right? I can count here 1, 2, and then this looks to be within the same cycle, 1, 2, 3, 4, and then you got a new high 5. So a 5 swing is never going to be a corrective structure, right? It's never going to be a corrective structure, or a completed corrective structure, let's put it that way. This can either be diagonal, like a 1, 2, 3, 4, 5, a diagonal, or maybe even an impulse, depending whether we have an overlap here or not. If there is an overlap, then it has to be a diagonal. If not, then we can count it as an impulse, right? It's either 1, 2, 3, 4, 5 impulse, in which case then it is bullish against this one, right? Now, yes, we can end the 5 ways and do bigger pullback to correct the entire 5 ways, but it is bullish because it's a 5, right? Now, another alternate is in a corrective structure. In a corrective structure, you cannot have a 5 swing. You can have a 3 swing, which is an ABC or WXY, right? But you never can have a 5 swing in a corrective structure. Now, corrective structure needs to be either in 3 or 7. So then that means 7 swing is what we call a double zigzag. So you got a zigzag here, and then you got another zigzag. So it's linked by W and X. So that means in this case, even if you assume this is corrective, it is not going to be complete at the 5th swing, right? Because it's not going to be, there is no corrective structure that ends in 5 swing, right? So if I consider this as my WX and this is a zigzag, then it has a potential target to equal leg, right, which is 147. Otherwise, I can count this 1, 2, 3, 4, 5 diagonal. Then yes, if that's the case, then we can be correcting larger degree. But then after that, we're gonna go higher again because 5 waves is a diagonal, like an impulse. So most likely see further extension. Now on top of that, if we look at the this correction here, now this is clearly 3 waves. There's no question, no debate on that. This is clearly 3 waves, right? So that means you know the right side is higher. Just by looking at this, you know the right side is higher. Because otherwise this would have been collapsing. If you think it is bearish, this would have been 1, 2, 3, 4, 5, right? If you think it is bearish, it would have been doing like that, but it did not. Instead, it did only a 3 pullback and finished at the 100%. Very typical of corrective structure, right? So now that means the right side has to be still higher. Just by looking at this, you know the right side has to be higher. So then we got 2 choices now. It has to break above this now, because unless we break above here, we can have what we call a double zigzag, in which, okay, you have a zigzag and then this is your correction. So this can be your W, this is your X, and then you got another zigzag down. Now even if we do a double correction though, notice that the first leg is already telling you this is a correction. So even if we have a complex correction to double zigzag, most likely, very high probability, you're gonna get another support here, because this one is not an impulse. So there's nothing to be fearful about that this suddenly becoming, you know, like a collapse, or to something. Like, I know that people that do not study structure, do not study Elliott Wave, and maybe only following the news, for example, and they are worried about Brexit right now. Brexit is well, the news has been for the past many years, it's been about Brexit until people maybe get bored of it. But yeah, I mean, if you just follow the news, you're afraid of Brexit, things like that, you think it's going to collapse. It's not, because I do not need to know the fundamentals, right? I do not need to know whether, you know, they're going to have hard Brexit or soft Brexit or whatever it is. I know just by looking at the structure here, the market is screaming, this is correction, and therefore the right side is still higher, right? The right side is still higher. So if it, for whatever reason, if it is selling off again, then I will expect buyers and support to appear again at the next equal leg. Otherwise, again, it's only 3 waves, and if people execute it correctly here, then it doesn't matter whether it does a double or not. If it does a double, we get out without any losses. But if it doesn't do double, then basically the pair is going to continue to extend higher, like what we are expecting here. And a break above this previous peak is going to confirm that yes, the next leg higher has already started for the pound sterling. Okay. So the way we trade is pretty different, guys, right? The way we trade in EWF is pretty different, and a lot of people don't understand the logic behind it. But yeah, you can check our service if you want to learn more. We have 14 days free trial. We talk about all these things in the live trading room every single day. Okay, and so I'll see you all. I'll see you around. The link is provided in the description of the video if anyone is interested. So see you all again tomorrow. Have a nice day, everyone.